Welcome students to my class Accountancy Simplified. In today's class, we shall discuss an important topic, adjustment entry, which is one of the functions of journal purpose. Now we shall discuss the concept adjustment entry. What is adjustment entry? The journal entries which are passed at the end of the year, that is on the date of balance sheet, to adjust the expenditure income to comply with the concept of accrued basis of accounting matching principle is called adjustment entries. Business units generally prepare trial balance for the at the end of a given period on the basis of on cash basis, that is on actual payouts of cash and checks and actual receipts of cash and checks. No element of actual income or outstanding expenses are there in the trial balance. So, in order to comply with the concept of accrued basis of accounting, we are to pass journal entries to adjust those accounts on the date of balance sheet to ascertain the true profit or loss. Now we'll have to understand what is accrued basis of accounting. According to accrued basis of accounting, if any income falls due in the current financial year for which the account is prepared, that income is to be brought into account in that particular accounting year, irrespective of the fact whether that income is realized or not. Similarly, if any expenditure also falls due in the current financial year but not paid, that is also to be accounted for with the help of a journal entry. And those journal entries are called adjustment entries. So what is adjustment entries? The entries which are passed on the date of balance sheet to adjust the accounts to bring a parity with the concept of accrued basis of accounting and to ascertain true profit or loss. That entries, journal entries, is called adjustment entries. So these are very important concepts. Now we shall discuss some common items of adjustment entries we face at the time of preparation of annual accounts and balance sheet. The first one is accrued income. What is accrued income? Accrued income means income due but not realized on the reporting date, that is on the date of balance sheet. This is particularly applicable in respect of interest income from banks and financial institutions. Banks and financial institutions, interest for the last quarter usually extend in the next financial year. But interest income of that quarter has become due for the current financial year. The trader has to bring it in the books with the help of the journal entry. So what would be the journal entry? We would debit accrued interest account and credit interest received account with the amount of interest due for the last quarter. And this will result in the parity with the expenditure and revenue. Now next item is pre-received income or income received in advance. If any income is received in advance in the current financial year, that is which relates to the next financial year, that is called pre-received income or income received in advance. This is particularly applicable in respect of subscription, rent, etc. Some club members do pay their subscription in advance. So the income that realized by the club in that financial year, it does not relate to that financial year. So the club had to adjust that income which is not actually income of that financial year to arrive at the true income or expenditure. Now what will be the journal entry? Income is received at excess, income is always credit. So we have to debit that income account, that is subscription. So subscription receipt account is to be debited with subscription receipt advance is to be credited. So subscription receipt account is to be debited with the credit subscription receipt advance account with the amount of subscription receipt advance for the current financial year. The next item is outstanding liability. What is outstanding liability? Expenditure due but not paid on the date of balance sheet. This is true particularly in respect of wages, salaries, rent, etc. etc. If we all know that if the current accounting year of a trader is calendar year, the salary and wages for the last month, that is December, is paid in the next financial year, that is in the January. But the expenditure relating to wages and salary for the month of December is the expenditure of the accounting year itself. So we have to adjust that amount of salary and wages in the current financial year with the help of a journal entry. That is called outstanding liability. So what will be the journal entry? We have to debit expenditure account, that is wages and salary account, and credit outstanding liabilities for wages and salary with the amount of outstanding wages and salary as the case may be. Now we shall discuss prepaid expenditure or expenditure paid in advance. If an expenditure is paid in advance on the date of balance sheet, that is also to be adjusted. This is true in respect of insurance premium, rent, etc. etc. Insurance premium generally paid annually for a period comprising of 12 months. Say if the accounting year of the company or firm is calendar year and the insurance premium is paid from 1st April to 31st March, the insurance premium for the month of January, February, March of the last quarter is not the expenditure of the current year. So that expenditure for the last quarter is to be adjusted to arrive at the true expenses of the current year. So we have to pass a journal entry in the form of prepaid insurance account debit to insurance premium account with the amount of expenditure paid in advance. So what is prepaid expenditure? If any expenditure paid in advance on the date of balance sheet, that is called prepaid expenditure or expenditure paid in advance. There are many other adjustment entries we have to be adjusted at the time at the preparation of balance sheet, at the time of preparation of annual accounts and balance sheet. There are innumerable number of adjustment entries which we shall discuss in the next classes. Till then, goodbye. Before I complete my class, I would once again request all my listeners, viewers, students to subscribe my channel, like and share my channel for better circulation among the students community of commerce. Thank you. Goodbye.